All right, let's talk about a really interesting company in the building materials space, TopBuild Corp, ticker BLD. From an investor's point of view, this is a fascinating story. It's part construction, part energy efficiency, and a whole lot of smart acquisitions. So let's dive in and see what makes these guys tick.
But before we get into the nuts and bolts, I want you to think about something. What if you could find a company whose main market was basically forced to grow by law? Just keep that question in the back of your mind, because honestly, it's at the very heart of the investment case for TopBuild.
So who is TopBuild? I mean, for a company that's a leader in its industry, they kind of fly under the radar for a lot of investors. Let's pull back the curtain and really dig into what they do.
Okay, so the business is really broken down into two main parts. First, you've got the installation side of things, under their brand TruTeam. That's the bigger piece of the pie. It's 62%. These are the folks who work directly with builders, installing insulation and other stuff. Then you have specialty distribution, which they call service partners. That's the other 38%. Think of them as a massive supplier, a one-stop shop for thousands of smaller local contractors. It's a really powerful one-two punch.
And what do you get when you combine those two businesses? You get market dominance. TopBuild is the #1 player, #1 in both installing and distributing residential insulation in the entire U.S. Now you have to remember, this is an industry with tons of tiny local mom-and-pop competitors. So having that kind of scale, that is a massive, massive competitive advantage.
All right, so we've established they're the top dog. With that leadership position as our starting point, let's build out the optimistic side of the argument. It's time to really explore the bull case for TopBuild.
So the whole bull thesis really comes down to 4 key pillars. We've already talked about their incredible market leadership. Next, we're going to look at their M&A engine, which is a machine, by the way, plus some really powerful long-term tailwinds and why their whole business model is getting more and more resilient.
You know, the heart of their growth strategy is this brilliant M&A engine. And this isn't random. It is a repeatable, proven playbook. They find all these small competitors, they buy them up to get stronger in a particular city or region, and then they plug them into their system to cut costs and drive growth. We're talking over 30 deals since 2015. This is absolutely a core competency for them.
And this brings us right back to that question I asked at the start. TopBuild is smack in the middle of what you could call a regulatory supercycle. You've got stricter building codes popping up everywhere, mandating more and better insulation, and on top of that, you've got government programs like the Inflation Reduction Act throwing billions in incentives at homeowners to upgrade. So what's the takeaway? The demand for what they sell is structurally forced to grow, and that's true whether the housing market is red hot or just lukewarm.
Okay, but it can't all be good news, right? Of course not. No investment is a sure thing. So let's flip the coin over and look at the cautious bear case. What are the things that could go wrong here? What does an investor really need to worry about?
The biggest risk, and there's really no doubt about it, is that their fortunes are tied to the housing market. Their business is super sensitive to what's happening in the broader economy. It's pretty simple. When interest rates go up, mortgages get more expensive, home construction slows down, and boom, demand for what TopBuild sells gets hit. It's a cyclical business, and investors just can't ignore that fact.
And beyond that big cyclical risk, there's other stuff to keep on your radar. You know, buying all those companies isn't risk-free, you still have to integrate them, and that can get messy, especially with big deals. The cost of their raw materials, like fiberglass, can swing around, and just like everyone else in construction, they're dealing with skilled labor shortages and, of course, constant competition from those smaller local guys.
But just when you think you have the story figured out, TopBuild went and made a huge move. A move that really changes the conversation and directly tackles some of those risks we just talked about. It was a major, major strategic pivot.
They spent $810 million, all cash, to buy a company called Progressive Roofing. Now, this was not just another one of their small bolt-on deals. This was a game changer, a huge, transformative move into a totally new market for them, commercial roofing.
So why on earth was this deal so strategic? Well, the magic is in Progressive's revenue mix. A full 70% of their business comes from re-roofing and maintenance. Think about that. That's work that has to be done. Old roofs leak. They have to be replaced, no matter what the economy is doing. This adds a huge, stable, and much less cyclical stream of revenue to their business.
So you see what they're doing here, right? This acquisition is a very deliberate pivot. They are actively trying to make themselves less dependent on the ups and downs of new home construction. TopBuild is really transforming itself from being just an insulation company into a much broader building envelope company. And that opens up a whole new world of growth.
Okay, so the story's compelling, the strategy shift makes sense, but for an investor, that's only half the battle. The other half is always, is the stock trading at a fair price? So let's take a quick look at the valuation.
To do that, we're going to use a really common metric called EV to EBITDA. Now, all that is a way to look at a company's value that kind of strips out the noise from different debt levels or tax situations. It makes it perfect for doing an apples-to-apples comparison between similar companies.
And if you look at the numbers, you can see TopBuild trades at about an 11.3 times multiple, which is almost identical to its closest competitor, IBP. So the big question for any investor becomes this. With this big pivot into the more stable world of commercial roofing, does TopBuild deserve a higher valuation over time? Should it trade more like a specialty company like Carlisle? That's the debate right there.
Okay, let's bring this all home and make it super actionable. If you're following TopBuild, maybe thinking about it as an investment, here are the absolute key things you need to have on your checklist.
First, on the big picture macro level, you've got to watch U.S. housing starts and building permits, period. Operationally, you want to see how their core business is doing, so look at same-store sales growth. Strategically, the most important thing is tracking the integration of Progressive Roofing. Are they actually getting the cost savings they promised? And finally, financially, it's all about cash flow and whether they're earning a good return on all the money they're investing.
Which really just leaves us with this one final critical question. Is this massive bet on commercial roofing an absolute masterstroke that's going to make the company safer and way more valuable for years to come? Or was it a super expensive gamble, buying a huge new business at what might just be the peak of the market? How that question gets answered? Well, that's what will define the future for TopBuild and its investors.